What if I told you SMCI is quietly handing out opportunities that most traders are too scared to touch? Yeah, I'm talking about supermicrocomputer, ticker SMCI, and the wild ride it takes immediately after earnings. Stick with me, because this isn't your usual boring stock analysis. Earnings day is when SMCI becomes unpredictable. 1 minute it's flying. The next minute it's testing fear levels that make retail traders panic. And here's the twist. That panic, that's your opportunity. Most people look at SMCI and see chaos. But traders who understand volatility see a roadmap. The stock doesn't just move randomly. It reacts to earnings beats, guidance updates, and subtle commentary from management. And here's where it gets spicy. Institutional traders manipulate the rhythm. They'll push the stock just enough to shake weak hands, then pull back for a breakout. Here's what you need to know about this volatility. If SMCI gaps up after earnings, the first 30 minutes is a mini battlefield. Retail traders jump in chasing the green candles, while smart money sets traps. If you can read the flow, the first reversal is where profits hide. That's the first twist most people miss. Let's talk numbers. Suppose SMCI closes at $140 pre-earnings. If it gaps to $150 on the announcement, watch the first retracement carefully. $145 to $147 becomes a critical zone. Traders who fade the first spike often capture the next leg up, but timing is everything. 1 second too late, and you're left holding a bag. But the suspense doesn't stop there. Post-earnings, SMCI is extremely sensitive to sector news. A single AI infrastructure contract announcement, a guidance tweak, or even Nvidia's performance can send the stock swinging 5 to 8% in minutes. Traders who anticipate these micro trends get rewarded, while latecomers panic. Part 2. Here's the brutal truth. SMCI doesn't care about feelings. It punishes overconfidence and rewards patience. You have to respect the volatility, not fight it. That's why scaling is key. Start small, take profits quickly, and then re-enter when the pattern repeats. It's almost like reading a suspense novel. Every candlestick has a twist. Now, some of you might be thinking, this sounds risky, and it is. But that's why the risk-reward ratio is insane. Traders who chase boring, slow-moving stocks never see opportunities like this. SMCI is a controlled chaos play. If you know the entry, exit, and where the traps lie. Let's break it down step by step. Look for the pre-market reaction first. Volume spikes are your early alert. Once the market opens, watch the first 15-minute candle. Is it a green surge or a fake breakout designed to scare retail? That's your twist moment. Most traders panic here, but you can profit. Here's another secret most YouTubers won't tell you. The second pullback often sets up the real move. SMCI tends to retrace after initial euphoria, creating a clean zone for traders who can act calmly. $146 to $148. Golden zone for scale in. $152 to $155. Target for partial profits. And here's the kicker. If the stock breaks $160 post-earnings with volume, the volatility shifts into a full-blown story stock. And story stocks don't follow logic. They follow momentum. Now let's talk strategy. Don't YOLO this. Size small, respect the swings, and know your stop loss. The beauty of post-earnings SMCI trading is that every move has a reason. You're not gambling. You're reading the market's subtle cues. And when you do it right, the reward is exponential compared to boring plays. And here's the final twist. Most retail traders either chase too early or sell too late. The quiet ones, the ones who wait for the first trap, scale in, and exit cleanly, those are the winners. That's how you turn chaos into opportunity. So what's your move? Watch the earnings. Anticipate the first spike, respect the retracements, scale in on fear, and capture momentum when the breakout hits. That's how traders profit from SMCI's volatility immediately after earnings. If this breakdown gave you an edge, smash that like button. It tells the algorithm you want real trading insights, not hype. Subscribe for more no-nonsense stock strategies. And comment below, are you bullish, bearish, or waiting to strike? Because in the market, the loudest traders often lose, and the quiet, patient ones, they get paid.